Hello everyone and welcome back to the channel. This is Fair Value Finder, and today we're going to do a quick look at a requested stock. This one we're not diving all the way into and picking out the numbers, because a good overview of it, looking here, we'll be able to see what we need to know about the company. And this company is Intella Therapeutics, NTLA. You'd likely assume it's a therapeutics company, and there's some good information here on Yahoo Finance. It's a great free resource. This is where I like to grab a lot of information from. So we see that it's currently at about $34, close to its 52-week low, and about $30 off its 52-week high. So it's close to half of where it's peaked at. So it seems to have gotten a lot of movement in the last 52 weeks. Volume's pretty low, right on par with the average. PE ratio, NA, means that they have negative earnings. And we see right here, earnings trailing 12 months, negative 5.3. And just that alone would make it kind of difficult to run all the calculations, because negative numbers really mess things up. And there's no dividend either. So two of the main factors of valuation this company is completely worthless on. Apparently, analysts have a 1-year price target of $84.22 on this company. So we'll see about that. The overall consensus is that it's overvalued. The real important thing down here is the earnings. Consistently negative earnings. And we see a nice little trend here where their revenue is flat and their earnings are just getting worse and worse year over year. Yet a lot of analysts are saying buy. It's high risk. It's one of those therapeutics plays. There's a lot of risk to it, and you could make some decent money, but that depends on your risk tolerance. Here on the channel, we do value investing, and we like to find companies with good current values that the market's just ignoring, and this is not that. Revenues, we again don't see a whole lot of growth. In fact, 2020 was the highest here, and it's gone down since then. 2021 was very low. What's really important here is the expenses are climbing year over year, and that's what's contributing to the negative. But the net incomes are down here, and just getting worse and worse, more and more negative year after year. So definitely not a good company, definitely not a good trend. Assets, we do see some decent growth in the assets. Liabilities, we see some pretty big growth there too, but not to the same degree as the assets. So they are pulling in some money from somewhere. Share count, this is no surprise. They're issuing more and more shares, diluting those shareholders, and their total debt just increasing. Common stock equity, surprisingly, is positive, and it is increasing. It's due to those really high assets. Cash flows are the other very important thing for the valuation, and it's completely negative across the board. So every form of evaluation that we use, this company is worthless. This is one of those where you buy and you just pray that they're able to deliver on whatever it is that you are buying into. And clearly they're investing heavy in something. Hopefully for the shareholders it pans out, but it's definitely not something that I am interested in, or probably will ever be interested in. And there's a lot of risk associated with it to the downside. This is a gamble, not an investment. And since that was so quick, we can take a look at another, BGFV, Big Five Sporting Goods Corporation. They might not have negative earnings, but what I'm seeing in the trends, it's going to be a no. So PE ratio 19.3, that's decent. EPS trailing 12 months 37 cents. They do have a dividend, and it is massive. So that's a red flag right there. On the dividend front, analyst expectations $9.50, right at fair value. We go to the earnings. They do have positive earnings, not a very nice trend with them. The next expected earnings. So Q3 seems to be very strong for them. Clearly, this Q3 is much lower than last year's. Not a good sign. Revenues, mostly flat. Peaked in 2022, back down in 2023. Earnings, we see a very similar story. They're essentially breaking even. So definitely not something that we're really looking at for the long term. One analyst on the stock, and they believe that they're going to do 23 cents in earnings this year when they did 118 last year. And then in 2024, 51 when they're doing 23 this year. So definitely have to let things play out and see maybe in 1 year's time if they're able to come in with these earnings and you're expected it to double in the next year, then there could be some potential there for just a growth play. Revenues, we see sales growth declining, 6.7% this year, 1.5% growth the following year. So we're not expecting a whole lot of movement in here. So that 20 PE seems rather high. 928 million this year, 942 next year. Last year was 995. So again, we're looking at a drop and then not a whole lot of growth bouncing back. And it's not looking like a very good trend for this company. Here are those flat revenues. 2022, they essentially came in with exactly what they did in 2019. If the expenses are climbing, then we have something to worry about for sure. Total expenses are flat, so it could be worse. Now we need to look at the balance sheet, see what's going on there. Assets, they are growing their assets. They shrank over the course of 2022. Liabilities, they shrank over the course of 2022 as well. They're on the decline for the most part. 508 was the start. They're down to 440. They had climbed up from 2020 to 2021. No surprise there. Most companies did. That's fine. Ordinary shares, they are issuing shares, but not at a massive rate. They don't have a whole lot of shares to start with. 21.6 up to 22.2. Common stock equity, 180 to 268. That's a pretty good trend. It's growing. Operating cash flows, basically broke even 2019, negative in 2022, decent years in 2020 and 2021. So what we're looking at here, definitely want to see more consistency in the numbers. Want to see how the next year plays out. It's definitely a put on a watch list, check back in a year, develop a thesis. But from what I'm seeing on it, they don't have the track record that I'm really looking for to invest in. So I want to thank you guys for watching. Please like if you enjoyed the video, comment if there's any other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.